Welcome back to the series of videos that explain how to complete the financial statement and analysis spreadsheet system. This video covers liabilities, which is all part of Schedule M and a couple other smaller schedules that we'll talk about in this video. This spreadsheet is part of the University of Wisconsin's Division of Extension's Farm Management Pulse program. The full curriculum and spreadsheet itself can be found at the websites shown on the visual. My name is Kevin Bernhardt, and I'm both a farm management specialist for the University of Wisconsin Division of Extension and a professor in the School of Agriculture at UW-Platteville. Several videos ago, we introduced the balance sheet and its three major parts: assets, liabilities, and owner equity. It took several videos to cover how to value assets on the balance sheet. The good news is that it is much less complex to work with liabilities. In fact, this is the only video that we're going to have on how to complete the liability section of the balance sheet. So let's get started. Okay, on the visual you have in front of you is the spreadsheet itself, and it's the tab called Balance Sheet Schedules. And we are midway down that, row 239, as a matter of fact. And this is the beginning of the liability section, in particular, Schedule M. So the different kinds of liabilities that we have current liabilities, which are those that are going to be due or you're obligated to pay within the next 12 months. Those are things such as accounts payable, credit cards, operating loan, current portion of any long-term debts that are due this year, just the part that's due this year, any accrued interest that might have accrued since your last payments, and other accrued expenses like the wages you haven't paid yet, taxes that you haven't paid yet, but you owe them. Those are all the kinds of things that you would find as a current liability. Non-current liabilities are really a small category, but it's large in number in terms of dollar number, but it's the loan balances that you have that are due beyond just this next 12 months. So if I have a loan that's a 5-year loan, the payment that's due in the next 12 months in this first year is a current liability, but all those payments due beyond this year collectively are a longer term liability, either in the intermediate liability section for intermediate assets or the long-term liability section for long-term assets like land and buildings. So Schedule M is where we can do most of our recording of these liabilities. And Schedule M has several different sections. Now, and if you watch my cursor, I'll circle these. It has accounts payable section. It has a credit card section. It has a section for operating loans, those loans that are due within the next 12 months. It has a section for term loans for intermediate assets. And you'll notice in this section, if you scroll over to the right side, there's a current portion that's due of those intermediate loans, and there's the balance that's due beyond 12 months. We'll explain that more later. And then there's a final section for term loans for fixed assets, and these are primarily a place to record your mortgages and your land contracts. And these all add up together for a total of your current liability and intermediate liability and long-term liability sections on your balance sheet. So let's get into an example of each of these. Let's go back up to the top of Schedule M, and we have three items for accounts payable. We have ABC Co-op, and we owe $5,196 on some kind of bill there. There is no interest, so we don't have to worry about that. And we could record the date of the last payment or the date that the payment is due. We should probably record it, but it doesn't change what any of the calculations. Argy's Diesel Shop is one that's also there, but we don't have anything there. So let's fill that out. So Argy's Diesel Shop, we have a 10% interest rate. The date of the last payment was on October 1st of 22. And today's date is over here on the right-hand side. You see this part right here. We need that to calculate accrued interest or get an estimate of accrued interest. So today's date, the date we're doing this balance sheet, is December 31st of 22. So that's what's recorded there. So zero interest, accrued interest due at this point. And we have a balance due of $3,485. Okay. For the credit cards, we have a Venture One credit card. It's paid off monthly, so there's no interest charges. And the balance due on it is $13,319. So we don't have to worry about the rest of this because we're paying it off monthly. Now, if we weren't paying it off monthly, then we'd have to figure out what the accrued interest is on any carryover balances. So for example, just to show this, if we had a 12% interest rate, or excuse me, if we had a 15% interest rate on this particular loan, and the last time we paid it off was December 1st of 22, and currently it is December 31st of 22. So a month has passed, and you note here on the right-hand side, it estimates your accrued interest. So if we had that situation, then we'd come back in here and accrued interest, and we'd put, if that is correct, and this is just an estimate, it doesn't automatically go over here. So if that's correct, or it's close enough to correct, we'd put 166 there. In fact, when we go back up here to the accounts payable under Argy's Diesel Shop, if we had an interest rate of 10%, and then if the last time we made a payment was October 1st, so interest has been accruing at 10% on this balance since October 1st, and today's date is December 31st, then the amount of accrued interest is $88, and we'd put that $88 there under accrued interest. Now, if there is no interest rate, then obviously that accrued interest is going to be zero. Okay, so non-term operating loans, we have a line of credit here that we're using for buying fertilizer and seed and so forth. The date of the last payment was December 1st of 22. The next payment is February 1st of 2023. Interest rate is 5.25%. The accrued interest due based on today's date being December 31st of 2022. Based on that is $853. So we're going to assume that that is correct. We're going to put $853 there. And the balance due on our operating loan is currently, the principal balance is currently $194,987. We also have a risk management line of credit, and you can see the information that's there for that one. Okay, so that takes care of some of our current liabilities that we have. Let's look at some of our longer term liabilities. We have several loans for capital assets. We have a cattle loan that was taken out 2 years ago. We have 3 different machinery loans. You can see the date of the last payments there recorded. You can see when the next payment date is. All of those have an interest rate associated with them. And based on today's date being, again, December 31st of 2022, if that was the case, then these are the accrued interest rates on each one of those, or excuse me, the accrued interest amount on each one of those. And we've transferred that over to the appropriate cells. The current portion due is that amount that's going to be paid within the next 12 months. And then everything that's due beyond that is accumulated together and put in this last column called balance due beyond 12 months for intermediate. And that's for intermediate assets, things like machinery, equipment, and breeding livestock. The last section here is for term loans for fixed assets. These are going to be things like mortgages and land contracts for buildings and for land. We have the original farm mortgage that was taken out 18 years ago, and we're still paying on it. We have the Smith farm mortgage, which was taken out a year ago. You can see the relevant information for the date of the last payment. And remember that date of the last payment is for use in calculating what the accrued interest is. Next payment date is there. We have the interest rates. We have the current portion that's due in the next 12 months. And we've recorded what's due beyond that current portion. And then we have the accrued interest. And, again, here in this case here, you see that the accrued interest was $4,125, and I have $4,111 in here. It can be different if you call the bank and the bank says, yep, you have accrued interest today of $4,111. That's the best authority as to what your accrued interest is. But if we want an estimate, obviously in this case, it'd be pretty close. So that then accumulates that information in the blue shaded cells. You can see where that information is accumulated. So let's go back to the top of this Schedule M. Under accounts payable, credit cards, we get to a section that says total accounts payable and credit card balances of $23,089. Note that that's listed under a current liability. So remember that number, 23,089,089. If I go to the balance sheet and I look under current liabilities, there's that $23,089 right there. So that's automatically transferred over to the balance sheet once you have completed the balance sheet schedule. If I go down to the next section, I see total accrued interest, $1,162 for the operating loans. And if I go again over to the balance sheet, $1,162, there's my accrued interest. So it automatically transfers over. I have a total balance due of operating loans of $207,567. If I go to the balance sheet, there it is. Operating loans, non-term, $207,567. Again, it automatically transfers over. Same thing happens for the intermediate loans and the long-term loans. So if I look at my long-term loans here, my fixed assets for my mortgage and land contracts, the long-term amount that's due beyond 12 months is $1,191,065. I go back to the balance sheet and I look under long-term, and there it is, $1,191,065. So all these numbers you see here in the liability section are coming from somewhere in Schedule M. Once you complete Schedule M, they're automatically transferred over. There are two other schedules, actually three other schedules. Schedule N for accrued expenses and liability, Schedule O for income taxes payable, and Schedule P, that's just an other, just a catch-all category. So Schedule N for accrued expenses, if you have real estate taxes that have accrued that you haven't paid yet, or you've got wages that have accrued up that you haven't paid yet, etc., that would be a place to record those. Taxes can be recorded over in Schedule O, those taxes that you have to pay, but you just haven't done it yet. So it's accounts payable, if you will. That's a place to record those. And then just this miscellaneous other category to catch anything that we haven't figured out a way to capture in other schedules. That completes the liability section of the balance sheet. In fact, that completes both the asset and liability sections of the balance sheet. There is that one last category of the balance sheet called owner equity. And I'll go over the balance sheet here, and it's one line at the very bottom. It's called owner equity. On the market basis balance sheet for this year, the owner equity turns out to be $613,721. And owner equity is our wealth. That is based on our valuation of assets, based on the amount of liabilities that we owe. The difference between the two, assets minus liabilities, is our wealth. It's what's left in our pocket if we were to sell this business today and get all the values out of the assets, pay off all of our obligations. That's the money we'd have left over in our pocket. And that is a very important number. Obviously, we want that number to be as large as possible. Obviously, we want that number to grow over time. In fact, that's something we want to track in our financial analysis is that owner equity number growing? And if we want to go deeper, it would be, why is it growing? But it's an important number that we get to after we've been able to accurately value all of our assets, accurately capture all of our liabilities, then we have an accurate estimate of what our wealth is. And especially if we look at that over time, that is an important thing to do. So that completes the balance sheet. Next up is the income statement. You'll be glad to hear that the income statement is a much easier financial statement to complete compared to the balance sheet. It won't take near as much. But until then, thank you for listening.